Greetings, everyone. This is RKrivo with our chart reading session for July 23rd. And at the present time, open trades on currency pairs that I have stalked on this drill down process that I bring to you once or twice a week or so on YouTube. And please keep in mind that I personally do this drill down on a daily basis to keep closer track of pairs. The open trades are up roughly 1,500 pips since the first trades triggered back in mid-June. Other trades that we have been in, we've been stopped out for losses. Others we've been stopped out profitably as we have trailed our stops on those trades as they moved in our direction. And as the market ebbs and flows, what we try to do is enter trades on the pairs that are trending, ride them for a while, and through proper trade management, we take our profits and our losses as they come using the Donchian channel strategy that you see on the charts. Now, as we go through the charts, if you have any questions about how and why they're set up the way they are, check out the video entitled Chart Tutorial, which was posted on May 11th. And also feel free to email me at RKrivoFX@gmail.com with any questions, just like it says on the slide there. Okay, let's get some disclaimers out of the way, and then we'll get started here. And as we always say, trading foreign exchange involves significant levels of risk, may not be suitable for everybody. Only trade with risk capital, only money that you can afford to lose. And there is a high degree of leverage involved, and that can work for you and against you. And the content provided in this YouTube video is for informational and educational purposes only. So ultimately, I in no way guarantee or imply that any setup you see in this video is going to result in a winning trade. My goal is, simply teaching you how to read charts so that you don't have to rely on anyone else as you move forward with your trading. And under the heading of that teaching, should you want to learn more about trading and have a personal mentor, that would be me if you're interested in that, email me at RKrivoFX@gmail.com and put 1-on-1 in the subject line, and we'll ultimately connect. Now, each day when I do this drill down, I'm looking for trading setups, higher probability trading setups that may result in profitable trades. And remember, trading setup is just that. It's nothing more. It may or may not trigger. If it does trigger, it may or may not produce a winning trade. And all these setups do is put the probabilities of having a winning trade more in our favor. The setup and its execution by no means assures a winning trade. That's what we're looking for. It's all about the probabilities. We want to look for pairs that have a trading edge, pairs that put the probability, as I said, of having a winning trade in our favor. Okay, let's get rid of this and let's bring up some charts here. Hang on 1 second so I can get out of this. There we go. We'll move this over. Okay, and it's got the New Zealand US dollar pair up here first for no particular reason. As some of you might know who have attended these before, I do a strong weak currency analysis, and I did one just about an hour ago. And if any of you want to learn about strong weak currency analysis, email me again, RKrivoFX@gmail.com, and I'll send you out a little article on how and why I go about doing this. It helps me zero in on the currency pairs, the ones that have that greater probability, and then I don't automatically just trade those pairs. I'm looking at those higher probability pairs to see if there's an entry point that makes sense for me in the direction of the trend. So when I did this, the strongest currency out there about an hour or so ago, and the strongest currency was the dollar. The weakest currency was the Canadian dollar. So what I would do in that case is I go to the currency pair USD Canadian dollar. And here we have a weekly, a daily, a 4-hour, and a 1-hour chart with the Donchian channels on them and slow stochastics, all my indicators of choice, and a 200 period moving average, the green line. Now we can see here the dollar Canadian has been higher highs, higher lows, had a nice pullback. I like to see those pullbacks because that sets up another potential entry point. So we're making higher highs and higher lows on the weekly. We're making higher highs and higher lows on the daily. Same way, obviously, on the 4-hour. And on the 1-hour, we had a little bit of a pullback, didn't touch that lower channel line. But I want to go back to the daily chart here just to see, because I always like to see how far a pair has room to run here. And on this pair, we're looking at 1.3052, give or take a few pips here, as being the high at that point. And we can see it traded up to that level and just beyond it, right at about that same level again. So it's just about at historical resistance, where it landed before in February of 2009. I might be a little standoffish on this one at this point because it's at that level. I might wait to see if it breaks through and then has another bit of a pullback. If I were a more aggressive trader, what I might do is, because we had this nice pullback on the 1 hour chart, is I might set a price alarm at that upper Donchian level there, which is about roughly 1.3053, right in that area. Set a price alarm so I can come and check out the currency pairs at that time should the price alarm go off. What I'm looking for in that case for this particular trade is I'd be looking to see if there's dollar strength across the board and Canadian weakness across the board, because then that tells me that the pair has a greater likelihood of continuing and maybe breaking through that 2009 resistance level. The next pair, dollar strongest, and we have the Aussie dollar as the second weakest currency. So now I go down and I would take a look at that particular currency pair, and there it is right there. So again, lower highs, lower lows on the weekly, lower highs, lower lows on the daily. What I like that I see right here is, as we expand this, we see that slow stochastics is below 20, so that's bearish. That's a good sign. And it's got good angle and separation and increasing separation to the downside. So I like that. Let's see how far this pair has room to move. And the way I determine that, okay, we crossed this little dotted line here at looks like 0.7350. We cross that and we go over here to the left and we see we've got a lot of green over here. So not a lot of support on this weekly chart as it moves down, well more than 100 pips. And I like to look for at least 100 pips of pip potential in the trades. So it's already taken out the lower channel, the lower Donchian channel on the 1 hour chart. But if I go over here to the 4 hour chart, it hasn't quite done it yet. And I'm cheating a little bit because price hasn't touched that upper Donchian channel, but we have had a nice pullback here. So what I would do at this point is I'd be setting a price alarm. It looks at about 0.7328, roughly at that level. And again, if and when that price alarm goes off, what I'm looking for would be Aussie weakness across the board, dollar strength across the board when that price alarm hits. That would give me a greater likelihood, like I say, of entering a trade that has a greater probability, not a guaranteed probability, but a greater probability of succeeding and following through. Okay, looking at the dollar again as the strongest, I now go down to the New Zealand US dollar, because the New Zealand dollar is the third weakest currency that we have right at this time. So again, I mean, this pair has been moving down for quite some time. We can see on the weekly chart, no question, which direction this particular pair is going. And we've got slow stochastics below 20 in that oversold area. And a pair that's oversold can stay oversold for quite some time. Just because something's oversold doesn't mean, uh-oh, time to buy it back, it's oversold. No, it doesn't necessarily mean that, because like you can see here, the pair has stayed oversold for about roughly 300 and some odd pips. So we don't want to get into the habit of as soon as something gets oversold, we want to buy it. That's not the case. And we can see this nice stair-step chart to the downside here. And again, this is what we want to look for. And for our entry, we've got a nice situation here on the 1 hour chart where price has in fact taken out the upper channel several times, 3 times in fact, and our entry would be, and we can see slow stochastics is open and good angle and separation to the downside, and I mean price alarm would be at that lower channel. That would be a point, and that's about 65.6561, where I would be setting my price alarm to come and check out and see, okay, New Zealand weak across the board, US dollar weak across the board, excuse me, US dollar strong across the board. That's going to make me feel a little more comfortable with my entry, because the likelihood of it following through is going to be a bit stronger. What I want to also point out on this pair is I use multiple time frame analysis, weekly, daily, 4-hour, 1 hour. And it gives me a greater view, greater insight as to how this particular pair has been moving through the various time frames. And we can see here, it's been making lower highs, lower lows, lower highs, lower lows. And here we see it's been moving up, higher highs and higher lows. But this is only on the 1 hour chart. The downtrend is still intact on the longer time frames. Now, this does not necessarily mean that price action is going to continue to the downside, but when you see a strong downtrend on the longer term charts, and you see shorter term charts that are retracing to the upside, that's okay. What we're waiting for is a breakout to the downside on the shorter term charts, back in the direction of the longer term trends. So just because you see a pair building out to the upside on a lower time frame chart, like a 1 hour chart in this case, don't immediately think, uh-oh, trend change, anything like that. It could be. I mean, trend changes have to begin somewhere. Maybe this is it. But looking at what we see here on the longer term charts, the greater likelihood is that price is going to trade up to a certain level. We don't know where that's going to be. It's going to trade up to a certain level, and then it's going to potentially turn around and go to the downside. So after it's made higher highs and higher lows for a while, once it starts to take out a low and starts to make lower highs and lower lows, it's back in sync with the longer term trends. That's what we're looking for. Okay, let's we probably have time for one more pair here. We got about 3 more minutes. Let's take a look at the CAD yen, the CAD being the weakest currency and the yen being the strongest currency. Excuse me, the yen being the second strongest currency out there. I try to move fast to get as much in as I can, so excuse me for misspeaking sometimes here. So CAD yen, we can see it move down, touch the upper channel, hasn't quite taken out the lower channel yet, and it might not, but it hasn't taken it out at this point on the weekly chart, where we've got good angle and separation on slow stochastics, which shows momentum, increasing angle and separation. So potentially it's set up to take out that lower channel. And here we've got touched the upper channel, took out the lower channel. This pair has already kicked off a trade on the lower time frame, the 1 hour chart. It's also taken out the lower channel on the 4 hour chart, but we could always get a re-entry potentially if we set our price alarm at roughly 94.52 in that area. Let's take a look and see at 94.52 how far the pair potentially has to move at that level. I don't like necessarily what I'm seeing here on the daily, the weekly chart, excuse me, because we've got a little congestion zone right in here that doesn't break up until about 93.61. So if we look at 93.61 and then go down, that's about 170 pips right there. I'd like to see it break through. I'd like to see price action break through this congestion zone right here, because as it hits that, like it hit that level before and then moved up, I'd like it to clear that if possible, and then that would give me a cleaner move further down in the direction of the trend, the way it's been going of late. Now we see it's been making higher highs, higher lows here, but it's starting to move to the downside. But like I said, it hasn't taken out that lower Donchian channel yet. And here we're in an open sell on the daily chart. We are not quite yet in an open sell on the weekly. So that being said, we've got about 30 more seconds, which is just enough time to say thank you for listening to these YouTube videos. Please feel free to contact me with trading questions that you might have. RKrivoFX@gmail.com. Thanks again, and we'll be back soon. Bye now.